Good morning, everyone. Okay, so I'm almost nothing to say in this crazy market. Of course, I have something to say. I always do. Kidding. It's just amazing to see such bullish and bearish gaps getting reversed one after the other like that. I don't know if it's ever happened before. Um, Markets are always interesting, and that's why we love it. But sometimes it certainly can be a bit frustrating. So yesterday's gap down under a green bar, it dipped down to support, and that's where I had bought the S&Ps down there, and they went a lot further than I anticipated that they might, but um, they went all the way back up. It was incredible. And so maybe somebody knew about all the great earnings that were coming out, and you know what happened after the close with yeah, it's been kind of crazy though, you know, McGraw, with these different gaps. So, um, I mean, I did mention about it possibly coming all the way back, and I thought, well, that seems like a far fetched possibility, but it's something that we had to think of since the Mr. Schizophrenic market that we've been dealing with, and it came all the way back, and then some. As you can see here, is looking at the Qs. So right now they're at around right 266 ish, right in this area. So we'll see, how much they can hold on to the selling that I anticipate is going to hit up there. Just normal. That's what happens when you have a gap up. Why is it the wrong chart? I'm looking at QQQ. Jake. I know. I'll get to the spiders, Jake. Calm down. I just decided to do it a little different this morning. I know it's early, so um, I mean, this was where the action was, right? After the close, primarily the S&Ps went up as well, and we had Apple and Google and Amazon and Facebook. It was 1999 all over again. And if it was truly 1999, what will happen today is if you thought last night was amazing, today will be more amazing if it was truly going to be a repeat of 1999 because it'll go up that much more today. And I'm not predicting that that's what's going to happen, but when we talk about 1999 and the relation to it and what's happening today, there really isn't much of a comparison other than maybe the market being, resilient to come back. But 1999, as far as advances, makes this look like, a puppy dog. And so, anyway, we look at where this is gapping up to in this little area of resistance, which, let's say by 10 o'clock, 10:30, whatever profit taking there may be, this gap is not going to get filled. And so we shall see what the price action is up there after a half hour or so. So you would think that what we've been talking about, corrective price action, buying on the dip, so on and so forth, that prices are going to blast up to new all-time highs. So we shall see. We'll see what kind of internals we have by the end of the day today, whether that produces a sell signal if the breadth is that good. So again, it's going to gap up here. We'll see what kind of selling comes in or the lack thereof, or buyers that step up to it and absorb that supply. And we'll really evaluate. So far, what we have going on is still a trading range until proven otherwise. So we'll just put that line up there and we shall turn it red. And we know there are going to be sellers in that area. And the question is, what happens when it gets there? So let's look at the futures. You can see where prices are at up here. And so just because of the environment that we are in, while certain things seem inconceivable, you got to think it. So, factory work, momentum move higher. There was the stall, right? Excellent price action at resistance, and then the continuation after the close. And now it's consolidating up here. So, those of you that have been around a while, you know the expression that wide range bars and these power moves are the weakest link in the chart, meaning there is nothing under here to stop this from going down. So the thought that has to be considered is maybe this can go all the way back down to the low. Not saying it will, it's certainly possible. Because this being the weakest link, there's no support. Well, there's a little support right here. There's nothing between here and here. So what is supposed to happen after a move like this is this consolidation is supposed to have this type of a reaction, which has already happened, where it attempts to go down and it springs right back up again. And it may be another attempt and it holds there and it creates a new support area, which is pretty much the essence of a 1, 2, 3 continuation pattern, which is what happens intraday in the number 2 bar on the daily chart. And then it eventually goes higher. So this is what we need to observe today to see buyers show up on the dip. We've got a pivot low here now where it dipped down that has now created support. Right? So pullbacks into this area on the futures, and if you're looking at the Qs down into the area of that pivot low, buyers should step up there now that they have this reference point that has been created. Clear's asking me, does a power bar and a long wick have the same response to movement in the opposite direction? Well, a long wick means that sellers, if it's a wick on the top, sellers took control and knocked it all the way back down. So what you've described to me doesn't really tell me the size of the wick, the size of the body. It's too vague to say. But if you have an example, we could look at it and I tell you. But what you're supposed to have is a very large body, like a wide range bar. Like, see this down here, the weekly chart? Big body, meaning small wicks. So anyway, we talked about this during the week where it was chopping around, that the bearish case has to stay in the bottom half of the wide range bar. Blew through it yesterday, right? Because this is encompassing the overnight trading, blew through it and came all the way up to the top there, where it now is, where it is stuck. All right. So resistance. Okay. Void. You really think this market is bullish? Keep on buying. You've got a new reference point. This is where buyers will step up, give or take. It doesn't have to be an exact line. Maybe it pulls a little bit underneath it, but it's supposed to come back up again and just show that demand is that strong. And so we can just now, right? We could just now take this line. We know where the resistance is, and we've got here. So here's a bar with a wick, right? So it's not, because it's a 24-hour chart, but let's just look at it like this, and maybe this answers your question. It's a wide range bar. And so just eyeballing that, I'll just say the middle of the bar is give or take about there, where you'll see there's just nothing. There's nothing there as it pulls back. So in any event, and again, this concept that we talk about with the middle of a big bar, it says that prices can go through the middle, meaning with a tail, but they have to come back up again, and buyers show their power and keep the candle body in the top. So this is the factory work. As we go into today, the end of the day, bar's complete. We go into next week, whatever the consolidation may be, maybe, right? Who's to say it doesn't blast off? But if maybe, we want to see candle bodies stay in the upper half of this range, right? So you may say, well, minor resistance or support, we go across there, which is, Lows tell you that it's subjective to go across, but people will use it as a reference point. So there it is, give or take. You want to say that high, the middle of the bar, nothing there. Pullbacks into this area, we will say are acceptable. We want to see candle bodies stay in the top. Okay, let's get to the S&Ps. And so we have a bit of a different picture. What a crazy kind of a bar with a giant tail in 24 hours. But when we had the gap down, looking at spiders yesterday, make it a little clearer. It gapped down under the green bar, went down to this low. This is where I and some others, I think some of you did it. We bought the W bottom on the 5-minute chart down there. And so it had then moved up into this range of the prior day's bar. So now spiders, which don't trade as actively, but overnight they went up to 327, which is right about there. And now they've backed off a little bit. So we've got a trading range going on here. So kind of in looking at this possibly at the end of the day or next week, we may come back to see this, and we've got these impressive days like that day bullishly, and impressive days bearishly, and dips down that turn into bottoming tail bars. And we may look at all of this in retrospect and say that was just a wild consolidation, just like that's a wild consolidation. We got another wild whippy consolidation. And while the trend is up in a very sloppy way, which we might call a self-correcting uptrend, it hasn't resolved itself yet with all of this movement that's gone on. Put spreads, SPX. Well, yesterday's low has to be a no-brainer, right? In not so much maybe in this market, right? But in no way, shape, or form should prices come back down here today. They just shouldn't do it after a bottoming tail bar that retested a prior pivot low. I know it's in a trading range, but if this buying was real yesterday, and you say, well, what about this selling? Was that real? Well, we're going to find out if it can get through it. I mean, it is real on the day that it's happening, no doubt. This was a power downtrend on the 5-minute chart that day. Then it gaps down and buyers step up again. And so the dip yesterday, when it got down near those lows, you can be sure I had doubts about pressing the button, thinking like, could this really go up? And I thought to myself, wait, Greg, this is the Mr. Schizophrenic market. Of course it can go up. And it did, right? Surprisingly so, even more than I thought possible. And anyway, there you have it. And, I think down here should be a no-brainer. It should be. Because with patterns like this, then prices aren't supposed to go back down there. What's behind these movements? I wish I could really say. I don't think anybody knows other than, well, possibilities. Hey, the Fed, the liquidity there is, I don't know if it's ever been more so. Historically, there's that liquidity. I think this Corona thing, while we can all be sure that it's having a very negative effect on the economy and people's jobs. I mean, the number yesterday, the highest number ever of lower GDP, unemployment, and so on. But I think the underpinnings, and whether you like him or not, I think the underpinnings of President Trump and the things that he's done give people the confidence or belief that when this virus is over in whatever shape it is, like it's been over in a lot of other parts of the world, things are going to be okay. I don't think people believe that we're going to go into a depression. It's a virus. The world's not coming to an end. And of course, if you have a belief that this is politically motivated, as we get closer, less than 100 days to this election, whichever way it's going to go, the virus is going to dissipate into the past as a memory. So we shall see. Let's continue. 32, 32.20. That might be a little close for comfort. Well, I don't know where this is at right now, 30.26. It might be a little too close, but there's going to be plenty more premium there. I guess this would be up around here now. Theoretically, yes. Theoretically, yes, McGraw. It shouldn't go down there. So if we just say the middle of that bar, right, it shouldn't go down there. And if it does, the buyer should step up and push it back up again. Right? Oh, MC and YouTube, if you don't think this has much to do about Trump, you're naive, my friend. The only thing that they're stopping short of is putting a bullet in his head. And if he wins, who knows? YM, which has been the weaker, came roaring back from hitting the 50, and it's down here a little bit. We'll see if it can bring up the rear. Russell, right, just sitting here. Again, if this can get through here, it's going to make a big move. So we'll see. It's just slopping around. It's not like everything's firing on all cylinders. Bonds are down a little bit, which they're supposed to be, and the market going up. They're up at resistance. We shall see. Oil should be up here a little bit. Well, dipped yesterday, and so that's broken. This move, not so much a bottoming tail. We'll see if it gets back up again, but more uncertainty there. And that is strength. Power move, little consolidation, and a gap up and continuation. And so 2000, right? The big whole number backing off, of course. That was, I think everybody had that thought. We'll see what happens as far as backoffs go at that point. And silver, which just consolidating here, but has, I think, maybe the most potential to in the future to make a substantial continued move up to the next resistance level now that it's got to this one. So, and our transports, you always look at, right? They had that reversal day yesterday. Day before yesterday, inside day yesterday. And this is a positive. We'll see if this can hold on to this move and get moving here. So why we look at these different markets and see what's going on, to read the tea leaves. All yours, Dan.
Good morning. So, Greg, you mentioned, putting a bullet in Trump's head. I read in the local paper here in Lauderdale, some man got arrested for not assassination attempt, but threat to kill him. Some dude here in Fort Lauderdale. And also, you were talking about the economy. There was, I'm looking at all these gaps. The queue's on fire, and the front page of the journal says slowest, record slowdown in the economy, highest unemployment, corona, just recession. It's going to take a lot longer to get going. And then you just look around at these stocks and it's just in amazement. With Apple being up $25, that is just incredible. Incredible. And the option pricing is agreeing that it's incredible. They had an expected move of like 12, I think, same with Facebook, and these things are just blowing them out. So Apple being part of the Dow, obviously, I am shocked that the diamonds are not up more. And it is what it is, right? So it's 30 stocks and, they're weighted. Other ones that are down, and we have a call spread on diamonds, by the way. So cat here is a drag. Cat, CVX, a couple others, down $1 or $2, but still, I thought with Apple it would be up a lot more. Merck, yeah, Google, yeah, Google down a little bit. I think that's because they said they had their first earnings slowdown, I think, in history. I mean, Facebook, look at this gap in all-time highs. Look at that, over 250. It's incredible, incredible. Well, it's not going to be split till August 31, they say. But yeah, I thought that was interesting also. I thought that was interesting that Apple's finally given a stock split. Unlike Berkshire and Kramer was on TV saying these big stocks, they should do the same thing. Google, Amazon, why do you need to be $3,200? Tesla, $1,500. All right, let's continue with gappers and earnings. YouTube is asking about XLE. Yeah, that was a breakout failure. Yeah, it was a bearish gap yesterday, and that's a bearish pre-market. That's a bearish 15-minute chart right there. So I like that as maybe 5-10-minute low as a day trade. That looks good as a short. We had a put spread on XOP that stopped us out yesterday, but XLE is much weaker. Labu, so someone's asking about on YouTube. It made a lower low, so it broke the uptrend, deep retracement, and it's kind of just flat here. I think we can find much better. I think that's just a mess right there. Yeah, pins was another one on fire today, 34 bucks. Wow, down from 10. Amazing. All right, let me continue with gappers here. Aluminum had a big old run yesterday. Now it's gapping down. This looks like either a penny stock or Corona toy. SPAQ, 12 and change, bearish gap. Looks like another toy. I would never swing trade things like that. Another penny stock toy. 17. Wow, that's a big gap way the heck up here. Same thing. These are just little day trade toys to me. Kodak is a recent toy since they got into the business. Yeah, I mean, yeah, I want to watch those for a long time as day trade setups. Look, that was a beautiful short, afternoon short right there. Look at that, boom. Now, was that a quality breakdown despite this reversal? And the answer is yes. Would I prefer it if this wasn't there? Yes. But I have lower highs, I have topping tails, and you short it. The prediction is it's going to go through that because of the bearish pattern there. UAA, you're extended, giving up that gap, back to support, no pattern. Sun looks like another penny stock toy gapping up. But this one actually might set up for a day trade. It's gapping up and coming in. If you can get a double bottom on this on the 15-minute chart, that could be a nice day trade. Ballard, the gap's too big. So Tehran, I would have liked it a lot better if it was just gapping up here to 2450, because then it's gapping over all this stuff. Now, I use my pre-market chart when I enter gap trades, and I personally wouldn't, that's extended. Another penny stock toy, 13 bucks. Wow. X-ray. Can't tell where you're gapping, but it's a bullish pattern. It's a reverse head and shoulders with a price void. So that actually looks very good. Very good. XOM had a weak close. I'm selling off pre-market here, but that would be a no-brainer call spread candidate also. Look at the weekly. 180 reversal weekly. That looks like it's in trouble. And WY gapping up. I think we had IP, his competitor, the other day, but it's extended. This gapping up 6150, not much volume. Look at Facebook upper right here making new highs. Can you imagine if you were short some of these things and they're gapping to all-time highs? Look at this 5-minute chart on Facebook. That is incredibly strong. You are not having a good day if you're short. Etsy put spread under 100. Yeah, it'd be a no-brainer. Somebody mentioned that yesterday because somebody emailed me pre-market. So I said, yeah, I said, absolutely. And then we're showing relative strength yesterday to the market gap down. IIPR, it's strong. The entry was 3 days ago. I don't have nothing to do with it now. Barry gap too big, 50. May not necessarily. When I say they're way too big, it's when they're off the charts. So I just eyeball this right here to 50, right? And it has room. So no, I don't think that one's too big. In fact, I'll put that here because I have team in the other computer. Team bearish gap 175. This would be a call spread candidate. Team UA is similar to the UAA. VFC did gap up. Bullish gap that varies. We'll come back to you. SNA, PSX. Yeah, these oils weak. Pins we looked at. PEG. PEG put spread. 10-minute high put spread idea. Newell, no pattern. Merck, there's bullish gap. We'll come back to it. Put spread watch. LYB, that's bearish. That's a bearish gap right there. Maybe 5-minute low is a short idea. Q's coming in. Profit taken as expected. So our diamond put spread is 15 cents. So now let me tighten the stop on that. But this looks good, LYB. I'll put him here in Apple. Put spiders up here so you can watch it. I'm just going to arbitrarily say 264.52, and that's just based on eyeballing. Yeah, team is weak. VICR. Yeah, that looks fantastic. And it's a beautiful 15. Qs and spiders coming in hard though, but this looks like it's on its own page, Jason. It would be an absolute no-brainer if the market at least weren't selling off. But it still looks fantastic. Looks great. I'm going to put it in a window. Wow, it's like light volume. Yeah, 1,600 shares. It's stuck right here at 83. UA. Go UA. I don't know what to do with that. I mean, the market's doing what we expected. Gapping up, coming in. And Google the weakest to the FANG. Wow, Google, that's an ugly gap. I didn't see that. We can do a call spread for today. Just over, if there's any juice. $15.40s, but I doubt we're going to get anything. But maybe 30-minute low, we go out to next week. Actually, 1540 is 60 by 105. But then if we try to do